First, our top story this half an hour. Futures trading in a tight range today ahead of Federal Reserve Chairman Jerome Powell's trip to Capitol Hill and after earnings from Goldman Sachs and all the banks in the last couple of days. Joining us now to break it all down is business developer and entrepreneur Tom Maoli. Tom, great to see you. Thanks so much for joining us.
Thanks for having me.
So we're focused on the Jay Powell testimony before the Senate Banking Committee. Are you looking at anything in particular to come out of this hearing today and tomorrow?
Listen, it's a new sheriff in town. Right? I mean, he's got his own policies. Clearly, he's a Trump guy, and it's going to be interesting where he goes and how he signals the street. I think that's going to be the key as to how the markets react. It's going to be all about his signal. I mean, listen, the economy is humming. He's got to watch where he moves these interest rates. He's got to hedge inflation, and it's going to be interesting to see what happens.
John Hilsenrath, what will be the main focus of the testimony from your standpoint?
Well, I think we're going to see a testimony that's pretty close to what his press conference was a couple of weeks ago, and he was very upbeat about how the economy is doing. I think he's going to be upbeat again today. We've had really strong numbers. It looks like we got growth in the second quarter of 4 to 5%, which is really off the charts. So I think, you get Powell up there, and he's saying we're going to stay the course. We're going to keep raising interest rates, and I don't think there's really anything to slow them down at this point.
I just don't know if it's going to be 3 or 4. I've been of the belief that it's going to be 3 total this year. I think 4 is overdoing it, frankly, because I know we're going to get possibly taking a 4% number on GDP for the second quarter. But we are expecting things to slow down.
The GDP now from the Atlanta Fed is running, and they change it based on every data point that comes out, but it's running at 4.5% growth.
Wow.
For the second quarter. That was updated yesterday. But, John, we also have the Federal Reserve reducing its balance sheet, which is also a headwind for the economy, or is meant to cool or prevent an economy from overheating. So that's maybe the reason we would get 3 instead of 4.
Well, I mean, I think that the balance sheet is another important issue that could come up. And where the Fed is going on that is they might do a little less on the balance sheet than they had been expecting, because
$50 billion a month was what they wanted to say.
For technical reasons, they had thought they need to get it down a couple of $1 trillion, but they might not need to because they've got the interest. They need to get the balance sheet down to get control of interest rates, but they've got the interest rate where they want it from a technical point of view, so they might not be doing a lot on that front.
I think the trade wars are going to cool things off. I think the trade wars are obviously, the balance of trade. It's going to take a while to get that to move where we have all of that economic growth back to the U.S. I think you're right with 3%.
I'm glad you mentioned the trade, because I mentioned this with Kevin Brady, the chairman of the House Ways and Means Committee, on Sunday, and he said to me, yes, we will see these tariffs cut into economic growth later this year. He says, yes, this will show up later this year.
I agree.
The president is going to meet with Congress today at 2 p.m. to talk about his Tax Reform 2.0 initiative. He's expecting that to be enacted by October. On Sunday, I spoke with Kevin Brady, who laid out the plan and how he sees Tax Reform 2.0 playing out. Listen to this. Does the economy need even more stimulus? Are you looking for a phase 2 tax
We're
plan?
doing a phase 2. We'll be doing it probably in October, maybe a little sooner than that. And it'll be more of a middle class. We did a lot for the middle class, but this will be even more aimed at the middle class. One of the things we're thinking about is bringing the 21% down to 20. And then for the most part, the rest of it would go right to the middle class.
Congressman, are you considering that, bringing the corporate rate from 21% to 20%?
So we're working with the president on a number of those issues, and I think the key point here is President Trump's tax cuts and reforms was about changing the economic direction of the country for the better. 2.0 is about changing the culture in Washington, where we don't wait 30 years between fixing the tax code. We get better every year. We continue to lead the rest of the world here, and so you're going to see, I think, permanence of the middle class cuts and those small business cuts will be the centerpiece of this. And people, I think, overlook the growth impact long term. That alone could help create 1.5 million new jobs in America, continue to raise paychecks significantly in the long term. So that'll be the centerpiece of it. We're working with the president on the rest of the elements of 2.0.
What's the impact, Tom, as an entrepreneur yourself? Have you seen a big impact from the tax?
Listen, there's a big impact. It clearly is consumers have more money in their pocketbooks to spend. The thing is that these don't hit day one. They take time. The trade tariffs take time. The tax cuts take time. It has to roll into the economy. I don't see 5% this year. I see 3%. I think next year is a better robust year.
So the people you're talking to, business investments, there's a lot of talk out there that some CEOs are really like putting off and postponing spending because of the potential for tariffs and trade wars. Are you seeing that with the people you're speaking?
Absolutely seeing it. I'm in the car business. I'm a new car dealer, a real estate developer. I'm seeing it. I was out golfing last week with one of the executives from one of the major car companies, a German manufacturer. They're scared. They're concerned. They're putting off investments. They're not building plants. They have to figure out where they go and how these tariffs are going to affect the ultimate cost of the consumer's product.
Well, and this is an uncertainty that's hanging over not just the European auto manufacturers who employ tens of thousands of people in the United States, but also the American car companies. General Motors, Ford are deeply concerned about a 20% import tariff on imports, auto imports into this country, and that's going to really stick it to dealers just like you.
Absolutely. Listen, it's gonna affect that. Like I said, it takes time to roll through the economy. I think Maria's right. I think 3%. I think 5%.
Three chimes.
Yeah, exactly. I think 5 is just way out of the ballpark.
Yeah.
I don't think it happens. I think it's going to take time for these. The tax cuts are going to be big. The corporate tax cuts are big. History has said when you make corporate tax cuts, it rolls into the economy. It allows corporations to open up their checkbooks and spend. But the question is, where do they spend with these tariffs?
I just want to point out, though, this is something the Trump administration could just ice right now. They could come out and say, you know what, we're not going to do this auto import tariff. If people are concerned, if business owners and operators and consumers are legitimately concerned about what this would do to the American economy, we're just going to table it. And that's not happening.
Won't do it. We won't do it. I don't see him doing it.
No.
We see a lot of behavior in anticipation of tariffs. What's happening in autos right now in anticipation of that 20%?
How's business, real quick?
Business is off the charts. Consumers have money, they're spending, but it's the manufacturers that are scared. They don't know where to put their resources, and should it be in the U.S., should it be overseas?
Uncertainty is real.
Uncertainty is real.
Tom,
Absolutely.
good to see you. Thank you so much.
Thanks for having me.
Tom Maoli there.